client portfolios without a reverse inquiry. And we're starting to see that change. So the 0 to 1 moment is ahead of many advisors. And what's been so interesting about the recent price action of Bitcoin since kind of the April tariff announcements is volatility has plummeted. Bitcoin didn't have the same drawdown as the NASDAQ. And so for the allocators who work on kind of 60-40 type portfolios and look a lot at volatility as a way of determining sizing of the position, this downdraft in Bitcoin vol is giving them an excuse to maybe take a larger initial position than they otherwise might have. So the reaction to the ETFs to date, I think it's mostly been the individuals diversifying, like you say, independent advisors who aren't owned by these bank holding companies like Morgan Stanley, who kind of hold themselves to maybe what they perceive to be a higher level of caution. Hedge funds was a huge driver because the Bitcoin ETFs made it much easier for hedge funds to play the cash and carry trade, the basis trade, use the futures market to try to earn an arbitrage. In the first couple quarters after the launch of the ETFs, hedge funds holdings of the Bitcoin ETFs outnumbered the advisors by more than 2 to 1. Even though advisors manage 10 times the money. So it was really this kind of, and we at VanEck, traditionally, we sponsor ETFs and mutual funds, but a growing part of our business is just the delivery of these model portfolios. So we've noticed that the traditional providers are not being innovative enough in our view, not including Bitcoin. So we've started a number of model portfolios that are highly diversified, but include Bitcoin, at the appropriate weight, conservative, aggressive, different models. So that's just a fancy way of saying that it's better risk-adjusted returns. So yes, it introduces some additional volatility. Bitcoin volatility is, depending on the day, kind of 3 to 5 times that of the S&P 500, but the performance more than makes up for it. So you do notice over history that the drawdowns tend to be larger, of course, when you have Bitcoin, but not enough to make up for the additional returns that you get. So most of these advisors, and then indeed, like the next couple months were a correction for BTC. Maybe some of that was gold taking the lead, and the two tend to take turns. And now in this most recent run up to all-time highs, we're not seeing the type of leverage or overheated funding markets that would typically mark a top. I think that instead it's being expressed via dilution in the equity capital markets. So the stock market has completely changed its attitude to NAV premiums that they're trading at. But I also think that an 80% drawdown is probably too big, and each cycle gets smaller, both the rallies but also the drawdowns. That's kind of a wishy-washy answer, but directionally that's where I am. Metaplanet is like 7 times the value of its stack, MicroStrategy closer to 2 times, and then you've got kind of some of the smaller names like Assembler, which is basically trading at 1x. So the banks that reliably trade at a premium to book are diversified. They're earning spread income and fee income. They've got consumer franchises and institutional franchises. And how many really of those are there going to be on the Bitcoin side? Strategy is the most evolved because they have products that are diversified. Fixed income investors can access the preferreds, arbitrageurs can use the converts. There is significant volatility in the stock that has sustained. And I think that he's done a great job of establishing. So if you're the the lender to the government, why wouldn't you just, lend in a straight treasury bond and then just buy Bitcoin yourself and keep 100% of the upside? So that there's a certain cuteness to it that might be too cute by half. I think what would really legitimize it, this is an obvious statement, is if the strategic Bitcoin reserve were actually a law, because if the government is or the Fed or the central bank actually holds Bitcoin in reserve, then they can kind of combine them into one combo asset. So yeah, that's kind of my thought on it. I am captivated by what's going on around the world and the number of countries that are mining Bitcoin with some of their spare energy, and now with these products going in kind and every broker dealer touching them directly, like they would just lose market share if they didn't offer some type of leverage on them. So not surprised, but it's great to see it. I think it's positive. Referring to if a bank wanted to hold it for their own account on their balance sheet under current kind of global banking framework, crypto's assigned a hugely punitive risk weighting that makes it impossible to hold.
Yeah, so it'd have to be, because gold, I believe next month is officially recognized as a tier 1 asset on balance sheets. So
that's right.
So to be something like that is needed for Bitcoin as well.
Yeah, and who is it? The Czech Republic, the governor. Yeah, I think that the policy changes not just in crypto, but just the generally kind of pro-growth policy with regards to energy infrastructure, AI. Those are big tailwinds for Bitcoin as well. To the extent we have cheap, abundant energy whose infrastructure, doesn't require a ton of red tape to set up, that should be positive for the investment cycle for Bitcoin. When you hear President Trump talk about Bitcoin, he usually mentions AI and energy in the same breath. And at real, it's going to dramatically change the return on capital equation for some of these heavy investors. And so that's one of the catalysts that I'm looking forward to. Some of these quantum leaders and, they're correlated for the moment in terms of these are leading edge tech type of assets. But the capital markets have accelerated so much. Now you get these ETFs right away. You get these 2x single stock ETFs, and it can entrench the early leaders because it runs up their stock price to such a level that now they have this really expensive currency to do deals, and they can maybe cement an early market share lead that for a company like MySpace, for example, they didn't have that, so they lost, even though they were the early leader. So that strategy includes some utilities, some midstream energy and MLPs, REITs, data centers. There's all types of companies that are now mentioning Bitcoin and blockchain in their SEC filings, in their investor relations materials, where the stock right now exhibits very low sensitivity to the Bitcoin price. But over time, if we're right, and Bitcoin can grow, continue to grow, that beta and vol to Bitcoin might increase, and we could end up with some excess returns from stocks that don't seem to be crypto stocks. So that's, I guess,
to a couple of Bitcoin developer meetups over the last couple of months across the country. The devs have it top of mind. They're working on it. I actually like Ethan Heilman. He had a really interesting post on the Bitcoin dev mailing list a couple months ago. I will say there's a lot of creative solutions being talked about. Obviously, none have been picked, but something to be aware of. And I'm confident in the sort of vigilance and competence of the developers focused on this problem to make sure it isn't an existential threat.
There were reportedly some pilots with like Exxon and Chevron. Those haven't materialized into anything larger, but I'm definitely on the lookout for that. Right now, it's more at the utility level and at the pipeline level. And I think that makes them interesting stocks to hold in an equity strategy, because the volatility profile of those downstream utilities and pipelines is much, much lower than the upstream explorers. And so when you combine that with Bitcoin miners, it's kind of a barbell approach that leaves you very well prepared to buy Bitcoin washouts.
Hardest money that's ever existed, and keep going about your way. So I'm very optimistic. This was an absolute pleasure, Matthew. Where can anybody who's listening find out more about the research that you're doing, what you guys are doing at VanEck more broadly? Where should we send?
So on our website, vaneck.com, there's a digital assets section where we publish monthly on Bitcoin, and then a separate piece on the rest of the digital assets ecosystem. So you can subscribe there for email updates, or just follow me on Twitter, Matthew.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.